What to do with cash outside of quad four? This is a great question. Again, we've been posting this on the podcast. So I'm actually going to read the question. Typically in the past, I would let you you guys at home read it. But since I joined Hedgeye, it's from David, excuse me. Since I joined Hedgeye, I stopped massive 2022 bleeding and started growing my IRAs again. Thanks. From a novice perspective, what happens to our larger quad four cash positions as we eventually move to quad one? In general, will we normally shift to more longs, fewer shorts, or less cash? Really good question. And we got a couple of data points that we'll run through. As I mentioned just a few minutes ago, go listen to that macro show from Steiner. He did a phenomenal job of running folks through the conditional probabilities of both the growth and inflation models. So although quad one is on the board at the moment, I would just kind of be cognizant as to the conditional probability of that quad one and be perhaps lean a bit more on the signal. And again, it's not even leaning more because the signal trumps the quad. So the signal, just be conscientious of more of the signal versus the quad environment, and trying to front run that quad may not, prove very fruitful for you. However, to answer your question, cash and liquidity are absolute king in a quad four environment. So let's review. If you pull up slide 15, guys, we'll review the highest, lowest expected values by quad regime quickly. It's a great starting spot in terms of, in terms of where to go hunt. But as I've said a number of times here today, the signal trumps the quad. So in that quad four environment, you'll see kind of, US dollar and gold. They're right there at the top in regards to best asset classes. So again, dollar, gold outperformers in traditional quad four environments. If you pull up slide 16, guys, we're going to come back to this expected value. If you pull up slide 16, this is actually from the Q2 macro themes deck. This is actually the gold's performance. Gold really does outperform and enjoys quad four, but it likes quad three a lot too. But in regards to where it outshines the S&P, it certainly outshines the S&P in terms of an average return in a quad four. So the gold's a great one to have in your bucket. And again, gold is considered a currency, so I would kind of tackling this question more from kind of a currency standpoint. So gold and dollars are definitely ones to have in your portfolio in a quad four. In a quad three environment, then you can kind of keep and maintain that quad three exposure there in regards to gold, but you'd be pivoting away from the dollar. So if you pull up slide 17, guys, we'll show them kind of the US dollar. On the other hand, unlike gold that enjoys a quad four and quad three environment, the dollar really does not like a quad three environment. So then again, this is back tested historically. So the signal will help guide us here. But the quad four protagonist though is the dollar, right? So the dollar really does outperform and it shines in a quad four. So you're absolutely spot on in terms of, okay, I'm narrowing down to two really good core assets in terms of asset classes that I want to have exposure to in a quad four environment. But what do I do if we start to see a quad one or type of environment down the road? And that's where, if we go back to slide 15, guys, to the expected values by quad regime, we'll I just turn your attention to kind of the go down those columns, right, and look at quad one and look at the best asset classes, the best equity sectors, the style factors, the fixed income sectors, et cetera, right? So you got a good list there, as I said, in terms of where to go hunt and how to go pivot. So this is a good starting off point, and I think in general though, to answer your question in terms of what will I see, or how will I handle cash from being kind of what we've been recently of, say, anywhere from 70 to 80% cash position, you're gonna go and you're gonna deploy most of that cash. You're gonna put most of that cash in asset classes, sectors, style factors, fixed income positions that have a bullish signal and sorry, a bullish trend signal, and that's really as simple as it gets. But yeah, you're going to deploy a lot more cash, and then that turns into what is the cash position that you wish to have on hand, and I think that goes into more about your essential goals and how that plays a factor, or kind of what rules do you have in place in terms of your goals, right? So your essential goals, in terms of the core basket of cash that you might need on hand for bills or mortgage or what have you. So then that becomes more of a factor versus and then understanding kind of how to go deploy that elsewhere.